It's a trap. Oh boy, we got a lot to discuss in today's video, guys. I got to show you exactly what's going on. We've got some bad news after hours here, after the market closed. We got to discuss that, okay? We got to discuss what's going on in the market. Some very troubling signs that are very reminiscent of 2008. And I hate to ever bring up 2008 because it's a very scary time in the market. It was a great time to be a buyer of stocks, obviously, as stocks got absolutely devastated. But it was a time, as if you held stocks, obviously, it was pretty darn devastating, right? And a lot of folks' wealth went down and things like that. And there's a lot I got to show you in this video. It's very, very important. So here today, it would look like, oh my gosh, it's a great day out there. You know, my big tech watch list, beautiful. Intuit was up 8%, Nvidia's up 5%, Tesla's up 5%. Netflix up 4%. I mean, it was just green, green, green everywhere today at big tech. If I looked at the stocks I personally have money in, I mean, it was green everywhere, including Very? What? You came back to life, Very? What in the world? The stock was up 118% today? Holy smokes, that ain't no jokers. But nonetheless, guys, I mean, look at these moves. It was just green everywhere. Green, 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 green. So much money to be made, right? And that was all fine. And that was all cool. And then it went south. Snowflake reported first after hours, stock down over 14% after hours. And this is a stock that's been absolutely obliterated. This is a stock that back in November was $405 a share. Back in November. That was like, what, 7 months ago or so? And today, after hours, the stock is $114. It might, keyword might, be on its way to under $100 a share for Snowflake. This is a rapid growth company in an industry that people love to pay higher valuations for. And here's what happened essentially, okay? So their net loss came in 166 mil. That's a 53 cent a share loss, whereas basically in the same quarter last year, 203 mil loss, 70 cents a share. So that's good, okay? Also, the analysts were expecting a loss of 52 cents. They came in at 53. So, you know, rate almost in line, but slightly worse, okay? Revenue climbed to 422 mil from 229 mil. That's impressive growth. You're not going to find many companies growing like that. I can tell you that much, right? Analysts had been expecting 414, so once again, a beat. The company recorded 394 mil in product revenue. The analysts were expecting 389, so a nice beat. But here's where the problems come in for Snowflake. And this is a problem for the entire stock market right now. So as far as guidance went, they are anticipating somewhere between 435 and 440 for revenue. That's on the low end of what analysts were expecting. Analysts on average were expecting 440. So if you're coming in at 437, 0.5, that's not good, right? That's a lower growth than what analysts are expecting in an environment where companies just continue to lower numbers and lower numbers. By the time we get out those numbers, maybe it's even worse, right? But here's the worst part. The company's calling for adjusted operating loss margin of 2% in the fiscal second quarter. And so margins are expected to get worse than analysts and investors had expected. And in this sort of market, guys, in this sort of market, you can't have anything be okay. You can't have anything be a little worse than expected, or your stock will continue to get devastated day after day after day. This was not a disastrous. I looked at the Snowflake report. It's not a disaster. But even though that stock's been absolutely wrecked, it's just going to continue to get wrecked because their numbers weren't quite there. And in this market, you have to come in with perfection. And dang it, even if you come in with perfection, your stock's still probably going down. Look at Apple, look at Tesla. They came in with perfection reports, A to A plus type reports, and their stocks are still going down. So in this sort of market, they will find any reason to say, and here's the worst part, this stock's down 14% after hours. We'll see how much it's actually down tomorrow. Because what we've seen continually is whatever these stocks are down after hours, the next day it gets way worse. And so, if this is anything like a lot of these other stocks we've seen out there, tomorrow the stock might be down 20%. We'll see. But that's been the trend. I've watched countless of these stocks, even Snapchat, for instance. Snapchat went down 25, 30% after hours when they had reported their troubling numbers, right, a couple days ago. And then all of a sudden, how much was Snapchat down the next day? 40%. So we'll see what happens with Snowflake, but the trend has been whatever you're down after hours, it's going to be way worse for you the next day, okay? Now, The most anticipated last big company to report this earnings season, and we don't have big earnings coming again for 2 months, okay? This is the last big dog. Everybody's been looking at this, and boy, did it just leave a sour taste in our mouth. It is Nvidia, and the stock is down over 7% after hours. Once again, if it follows a trend we've seen from all these other public companies, tomorrow will be even worse for the stock price than what it is after hours. That's just been the trend. We'll see if that trend continues to hold up. Does Nvidia hit a new 52-week low tomorrow? The 52-week low right now is 154. After hours, it's flirting with that. We'll see what happens, okay? So, Nvidia, what happened here? EPS beat. They came in with $1.36 versus $1.29. Revenue beat. They came in with $8.29 billion versus $8.11 billion was expected. So good. That's awesome, right? But this is where the problem comes in. And this is a big problem. Nvidia said revenue for the current quarter would be about $8.1 billion. That is way under analyst expectations of $8.54 billion. So basically, Nvidia is supposed to do at least $400 million less in revenue than what analysts were expecting. And so even though Nvidia stock has been hammered, you can't miss revenue by over $400 million. This market is unforgiving right now. It doesn't matter if you're one of the best companies in the world like an Nvidia, right? Now, this is scary. Nvidia CEO Jensen Huang, who's done an amazing job with that company over the last decade, said the company was facing, quote, a challenging macro environment. So, when I got in the market at the end of '08, right, I was reading all these reports, and as 2009 reports came out and whatnot, and what these CEOs continually said in '08, '09, and even in 2010, in these quarterly reports, these annual reports and things like that, they would all say it's a very challenging macro environment. This was their thing. And the amount of times in my first 2 years of investing that I read challenging macro environment was ridiculous, okay? I think I have that permanently, like somewhere in my brain cells, it's like permanently like etched in there, challenging macro environment, okay? And you haven't really heard a lot of the CEOs say that recently, but get ready, it's going to happen a lot more, and especially over the next quarter or two. The amount of times you're going to hear challenging macro environment is going to be a long list, okay? And so this is just like, it reminds me of '09, '08, 2010. It's all happening again, essentially, when these CEOs start saying that. So this is not good for Nvidia. This is not good for the entire market. This stock, if this stock's down 7%, 10%, 12% tomorrow, it will bring down the entire Nasdaq. It will bring down all the semiconductor stocks. It will bring down AMD. It'll bring down Apple. It'll bring down Microsoft. It'll bring down everything. If this stock is down big tomorrow, okay? Natural gas just surged above $9. It hit the highest since 2008 as inventory stayed low. So we all know crude oil has been going crazy last number of months. Natural gas is going crazy. And the scariest part, once again, with any of these fuel costs is not just that it gets so much more expensive for the consumer, which the consumer's already been so sliced and diced with all this dang inflation and rent increases and everything that's going on. But the scariest part of this is, guys, the last time natural gas went crazy was in 2007, 2008, as the economy was weakening and we were getting ready we were basically going into a big recession. And here we are at this moment in time where the same exact thing is happening again. We got natural gas going absolute beast mode, while we're starting to get a lot of things to be very worried about when it comes to the economy. And we're not just talking about inflation anymore. We're talking about company earnings. We're talking about some companies keyword is starting to do layoffs, with potentially a lot more coming, with potentially hours being cut and things like that, right? And so here we are at this moment in time where it's so eerily similar to what happened in 07, 08, right? And here we are at this moment in time where real estate has seemed like it's holding up, but all of a sudden we're starting to get that wall starting to crumble, right? And remember, when real estate really started taking up, it was in '08 and it was more into '09, 2010, and then finally toward the back half of 2011, real estate finally bottomed. And so, like, it's almost scary. It's almost scary how identical everything is kind of lining up here. And that's what freaks me out about this whole situation, okay? Now, this is hilarious. This is hilarious and this is scary, okay? The Fed minutes point to more rate hikes that go further than the market anticipates, okay? Now, somebody tried to pitch this today as that was a good thing for the stock market. No, 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 no. Okay. That is game over. That is horrible for the stock market. Here's the deal, guys. Okay. When you have a weakening economy, which is clearly what I think is playing out right now based upon these companies' earnings, based upon all the real-time data I'm getting, and based upon how many companies are saying things have weakened considerably starting in April, and especially going into May. When you put all these pieces together and you see all this starting to play out, right? And you got the Fed talking about maybe raising rates even more than expected, they're going to shoot way too far to the other side, and they're not going to be, and the problem is it's going to take them 6 months, if not 12 months, if not longer than that, to try to get the economy back on its feet again. As they shot way too far to the other side, right? They way overheated the economy. They flushed way too much money. And it wasn't just the Fed, it was the government programs and everything like that, right? They flushed way too much money out there. And they thought like, oh, inflation's going to, just come down and things like that. As they flushed all this money out there, inflation went way higher than the Fed had ever anticipated, right? And now we're in this situation where they're going to do the worst thing for the economy. They're going to try to keep raising rates and keep raising rates, thinking, that we're trying to get inflation down. Meanwhile, the economy is going to be cratering, and all of a sudden they're going to have this other situation on their hands, which is going to be a crashing economy, a crashing stock market, which has already started to play out, a crashing crypto market, which they don't even care about, a crashing real estate market that's going to start playing out and already is starting to play out, but will really start playing out over the next 6 to 12 months. And then they'll have to deal with unemployment climbing, all simultaneously and all in a midst of delusion of like, let's keep raising rates, right? And so this is just, this is not good news for the market, guys. I have no other way to say it. This is bad news for the market. Don't let anybody try to tell you this is good news for the stock market. Because I can tell you, if you look at what's going on in the economy, I can make an argument that the Fed should already be trying to cut rates. But they can't do that because they pushed up inflation so high, right? That now they're in this situation where like, well, we can't get away with doing that right now because inflation's still so high. So we have to continue to raise rates. So, my gosh, it's bad, guys. It's bad, okay? Now, as I said, it's a trap, right? So Toll Brothers went up today, 8%. And this is on the back of their earnings, all right? Now, everybody's all excited. Ooh, housing's okay. Woo, Toll Brothers reported good earnings, okay? First thing you got to understand about Toll Brothers is Toll Brothers sells to the highest net worth clients by far of any home builder that's a public company. Like the average dollar price of a Toll Brothers home versus all their other competitors, Pulte, KB Homes, you can't even compare the companies, okay? So it gives you a very false interpretation of how the actual people are doing that really run the economy, which is a la the middle class, okay? The middle class is not the core buyer of a Toll Brothers house. At the lowest is the upper middle class, but really it's more the wealthy that buys a Toll Brothers house, okay? Now, what Toll Brothers said on their earnings, right? Great numbers. They had some great numbers, but these are all from, as far as their deliveries and things like that, these were orders that were placed a year ago. The time to get a Toll Brothers house built is like a 9 to 14 month cycle. And so all the numbers they're putting up right now that, oh, look at our EPS, look at our revenue, look at this, right? Okay, this is all numbers from like basically from houses that were bought a year ago. So, this doesn't really tell us about where the future real estate is going, which is what everybody actually cares about. The homes that are being delivered today, the revenue that's being collected today for Toll Brothers, the EPS that's being collected today, that bottom line, that's all from these homes that were placed 9, 12, 14 months ago. And so you can't even begin to get excited about any of those sorts of numbers. And so all of the real estate stocks pumped today. My housing stocks list just went boop, 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 right? But the problem is, Toll Brothers even said that traffic is slowing in May. They mentioned this. I listened to the conference call. They mentioned this. Now, Doug Yearley, the CEO, basically tried to pin that on, kind of normal seasonality type trends. Well, I can tell you, it ain't going to be normal seasonality trends. Real estate is dropping off a cliff as we go along right now. And it's all happened within the last 30 to 45 days. Every single person I know that's in the real estate industry is reporting this. And the hottest markets are getting hit first. And after that, it's going to be everywhere else. And by this summer, right, by midsummer, it's going to become undeniable. I don't care where you live in the United States. is going to become undeniable that, oh boy, real estate's in a bad spot and it's going to get worse, okay? And so this is the problem with Toll Brothers, is their numbers for next quarter as far as housing contracts are not going to be good at all, in my opinion. And the next quarter will be even worse. And the next quarter, guess what? It'll be even worse. And so that's just a mess for housing right now, a complete mess. Now, the Wall Street kind of knows this. That's why Wall Street's been pushing all these stocks down to 52-week lows and has been selling heavy. It's just almost funny to see kind of a one-day rally like right now when I'm like, dude, housing is not in a good place, okay? Now, as the Fed has a credibility issue right now, the market has a credibility issue. And the reason being is you hear all these companies missing on margins, missing on guidance, potentially missing on EPS, inventories, and just their profitability being hurt with their business models. And so the problem is when people look at things like forward P metrics, people have trust issues right now because they're looking at this and are like, okay, these companies keep missing. Almost all these companies are either missing on guidance or they're missing on current numbers. And so everybody's looking at this and they have trust issues. So they say, yeah, the stock says it has a 14 forward P, but I don't know if it really does. It might actually have a 20 forward P or 25 forward P. And so you have like trust issues in the stock market right now where no one can really trust whatever numbers are out there because they're just continuing to be let down by these companies and kind of their weak forecasts and those sorts of things. And so until we get a switch there, right, where companies start beating to the upside and start coming in with better guidance than what was expected and better EPS and better margins, right? Until we see that, the market's going to continue to have this just massive, massive trust issues with trusting anything that's a forward-looking metric, right? Now, unemployment, I think, is going to start climbing this summer. And I think there's a high probability that by the fall time, we'll be at an unemployment rate between 4.5% and maybe 5%. And so what I think is going to play out there is I think that will be the moment that the Fed can start to consider, okay, maybe we need to lay back here because unemployment is starting to climb. Right now, unemployment is still super low. In May, it's going to still be super low. In June, maybe we start to get a little climb there. I think in July, August, we'll get some climbs. And I think eventually by fall time, we'll be in a 4.5% to 5% range. And I think that's the moment that the Fed will finally be like, oh, shoot, man, we're pushing into a major recession here. And if companies next quarter is really the ugly one, because here's the thing, guys. Almost all these companies have mentioned that May has been a considerable slowdown, right? April kind of started it, but May has really been the big kind of slowdown here, okay? And so if the dominoes are rolling the wrong way already, right? And so if all of a sudden June's really bad, then that entire quarter for these companies is bad. And then if June's really bad, then they're going to give horrible guidance for the next quarter, right? Because they're like, shoot, man, like business is bad. Right now, these companies can kind of be in a little bit of denial, right? Because it's like, well, we were doing pretty good, but yeah, things are starting to weaken now, but maybe that's just a little short-term thing. So they're kind of like in this like limbo, like, is it really bad or not? And, the longer it's bad, the more these companies are like, oh yeah, it's going to stay bad. And so that's definitely something I see playing out there. And so what I'm looking at personally in the market is I'm trying to buy on red days. So for instance, yesterday was a big red day. NASDAQ was down over 2% yesterday. And so yesterday was a day I put 30,000 in the market, right? And I was a buyer. Today, I put $0 in the market. I didn't do one buy order today. It was a nice green day out there in the market. I'm like, I'm good today, right? And so what I'm trying to do is buy on those big red days, those new 52-week low type days, because, right now we're just in a very ugly market. And obviously, like everybody else, everybody has a limited amount of funds you can put into the market. And so when I'm trying to buy, it's on those big, I almost want to call them like capitulation type days. And when we get one of these like little rally things, I'm like, okay, yeah, today I'll take the day off from buying today, guys. And so that's kind of, how I'm staying focused and just continue to load up on companies that I love for the long term over the next 3-5 years. So yeah, I hope you guys enjoyed this. As always, if you're looking to join my private stock group and get inside of the private Discord chat with the private live streams, lessons from experienced 6- and 7-figure investors, access to all the course curriculums, you want to learn how to read financial statements on a very, very high level, like some of the best investors in the world, then check out pinned comment down there and apply to become a member with us in there. Much love as always, and have a great day.